Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial. Thanks for joining us today. I say us because I have a friend with me today, a co-host, a guest, Matt Allen. Matt, welcome back to the show.
Thank you, Michael. Always a pleasure to talk turkey with you.
Yeah, turkey and health insurance, something
Absolutely.
like that. So Matthew Allen is owner of Iconic Insurance, and Matt has been on the show before, a few episodes back, more than a few, maybe 20, 30 episodes back or so.
Yeah.
And a lot of cool stuff has changed since then with Matt's business as well as just life in general. So we're going to catch up on that and talk health insurance. And so let me go ahead and do a quick intro, and then Matt, you can kind of fill in the gaps that I may have missed. But for our audience who may not know you, Matt is a health insurance expert specializing in health insurance education for individuals, families, and small business owners. And Matt specifically helps to navigate the confusing health insurance climate. I think we can all relate to that. And provides unique solutions and customizable health insurance options to fit your individual needs. And this is a huge need. So I just love telling people about you because what you do is so needed by so many people. Health insurance is confusing, it's overwhelming, it's expensive, and the options that we think are available are just sometimes difficult and challenging to deal with. So how did I do on introducing you? Is that a pretty good?
It's pretty good. I can tell you used to be in marketing, but just the big change from last time, as we were talking before we went live, is I'm now an independent agent myself. Went into business, Iconic Insurance. I used to be a captive agent, and it was great. I learned so much about the business, and I'm still helping the people that I helped my first 4.5 years in the business. But now, as an independent agent and a broker and an agency owner, I can truly help. If there's ever any product out there that really speaks to me on the individual market, I can just go get a contract with them, and I can start placing people in those products. Whereas before, I would always put the people in the right position, but sometimes, products are not a one size fit all, with anything, let alone health insurance. I mean, everybody is in a unique situation, whether it be financially, health wise, family wise, transitioning through jobs. There are so many different variables to consider that when I was a captive agent, I would identify these various needs, and I'd say, hey, Michael, I know exactly what you and your family need. It's so great. Go talk to my buddy Jim, and he'll set you up with it. And it just seemed, it was genuine for me, but it seemed sort of disingenuous when I would introduce myself as from one company, but hey, I'm going to show you all these other companies' products too. Well, now that I'm Iconic Insurance doesn't have any insurance products that they underwrite, or they're not paying any claims, but they offer all of the products
Right,
that
you're a consultant. Yeah.
I'm a consultant. That's all I get to remove any sort of bias from the equation, because, you know, the longer my happy, the longer they stay on the books, the longer they pay money, and the more commission I make. So I am directly motivated to keep people as happy as possible for as long as possible.
Yeah.
And so, like you said, it's a niche business. There aren't a lot of people out there. The majority of my colleagues in this arena are still captive, and they still are using one product or one company, and it's not necessarily always the best.
Yeah, your model is very unique. I think I wonder if more people are going to go independent in the future, because it seems like you're right. I don't really find many people doing what you're doing, and obviously, I'm a big fan of independence, being an independent financial advisor as well. And there's a big movement in my industry of jumping away from the big firms and going independent. And I just think it's I mean, obviously, I'm biased, but I think it's just a great way to serve clients. You remove the bias, you remove the all of the conflicts of interest that could go in there. I mean, I shouldn't say all, because there's always different scenarios, but in general, you remove the conflicts of interest and you can serve your clients the best way that you know how, using a multiple different solutions. So I'm a big fan of the independence route. So I'm glad to see you did it too.
And I just feel great about it. And it's, some people will ask me sometimes, what's the best health insurance? Well, I just want the best, whatever it costs, or I just want the cheapest, or I just, they want these the dash est at the end of the word, and it's,
Mm.
each product exists for a reason, and it exists for a consumer. And sometimes you need a couple products, sometimes you need several different companies, sometimes it's just one. And so it's not to, poo-poo anybody who's a captive agent. It's not, they aren't necessarily going to put you in the wrong spot or the bad spot. It's just one size fits all,
Mhm.
simply doesn't work for health insurance.
Yeah. So let's talk health insurance. That's a great segue. Specifically today, and last time we were talking in more general sense, but today we're talking specifically about kind of some of the more modern health insurance options for small business owners. And that can mean either a solo business owner or a business with some team members. And I'd like to cover both, but I wanted to bring this up because I was with you in a presentation recently where you covered this in a really great way. You really kind of clarified, hey, there are lots of other options for small business owners beyond what they might think is available. And you kind of broke down some of the example scenarios where there can be cost savings and even better benefits to them and to the team members. So if I could start with just my question is, what are the some of the typical, known health insurance options for small business owners? And then what are some things available to them they might not know about? So what do we typically think of as a small business owner? What's the usual route we go?
So most small business owners want to offer something. And I've actually run across quite a few small business owners who they almost think the decision to offer health insurance is a binary one. And what I mean by that is we're either offering health insurance and it's this one known entity and it's this huge, amazing plan with beautiful benefits. Think like Ford Motor Company benefits or, US Steel benefits, or the other alternative is we don't offer anything. And there's so much gray area in between, but let's start there. I think during that presentation we were talking specifically about small business owners, those with fewer than 50 full-time employees, and they don't legally have to offer health insurance, but typically most of them want to. So to go back to your question, what are we typically looking at? You're typically looking at a fully funded ACA qualified small business group plan. So that's going to be, Blue Cross Blue Shield or Humana or United Healthcare with the good network and, the name that you trust, the company that's been around for 100 years. But the issue with these plans is the cost. I think the average cost last year for an individual on a group plan was $7,000 in premium. And so when a small business owner wants to offer that to an individual, legally, they have to offer it to every full-time employee and they have to pay at least 50% of the premium. And so depending on what you're paying your full-time employees, this could just be an untenable situation just to start. And so a lot of small business owners, when they're looking to make that decision, is they go to what they think of as health insurance. They think of Blue Cross Blue Shield. They think of United Healthcare. They think of Humana, Aetna, all these companies. They're great companies, but the plans are very expensive because you get what you pay for in health insurance. And so though they might go to a broker who offers these plans and they get the quote back of, $7,000 annual premium per employee, or one of the numbers that sort of even shocked me was it's the average cost to insure a family on a group health insurance plan is over $21,000 a year in premium. And so when the small business owner has to contribute at least 50% of the employee's premium, that leaves either the employer has to foot more of the bill for the dependents and the family, or the employee has to take a huge deduction out of their paycheck every month just to have benefits. And so what I'm trying to shine a light on, and what a lot of insurance companies are trying to offer, are alternatives somewhere in the middle of that binary decision some of the business owners think of, that we don't have to go all the way over here where it's $21,000 a year to insure your family, but we also don't have to be here where we just say, hey, not my problem. I legally don't have to offer you health insurance. Just go find it. And so what I'm trying to do is meet them in the middle there.
Well, let's talk about that middle because you're right. Most of us just say, well, if I can't get the plan from Anthem, it's nothing, and it's either zero or $20,000. So you're right. We don't really we don't look in the middle because we don't know it's there often. So tell me
Mhm.
about that spectrum in the middle. What options are between the zero and the massively expensive?
So there's basically a couple flavors in between there, between the massively expensive or zero. There's an option, and it's called level funded plans. I really like these plans, and I actually didn't go over this in the presentation, Michael. So these are they're not necessarily a newer idea, but it allows companies to offer health insurance to their employees where the company themselves takes on some of the risk. Okay. And they do that by doing a level funded plan. So they have this catastrophic stop loss on everybody on the plan. And then they have a smaller portion that is sort of a self-funded portion, where they get a company like Aetna or Cigna to administer the plan, administer the benefits. And so the company themselves are on the hook up to a certain amount per year for employee benefits. Now, it's really getting into the weeds there on how you break that down. And they do medical examinations for the employees in order to even issue the policy. Every year at the end of the year, if you make a bunch of claims, the company could be out more money. And so that's really a conversation that would probably take an entire podcast just for itself to break down all the differences in there. All you really need to know on that one is that they allow medical underwriting. You have to renew each year. And so if you make a bunch of claims, that plan might not be offered to you at the end of the year. And so for a young, healthy group and a young, healthy company, it's a very good way for the employer to offer similar benefits to that $21,000 annual premium family type of benefits, but they have to qualify for it. And so it's not really my favorite thing to do because I like to offer something that will work for everyone. And so if we go from the full bore, Eli Lilly Anthem PPO, $21,000 a year in premium, to the level funded, which can save some money based on your health, I want to go a step further down the ladder, not necessarily in descending quality, but in descending cost to the small business owner and to the employee. And that's what I was mostly going over in that presentation that you happen to be at. The way to offer the best benefits for small business owners, in my mind, is to simply offer your employees a stipend and then allow an individual health insurance agent like myself come in and sit down with each employee individually, whether that's with their spouse, with their children, coming to their home, meeting them at a restaurant or a coffee shop to just discuss.
Over Zoom.
Or Zoom, perfect. Yeah, even better. Um, because when it comes down to it, we're a very diverse population. The smallest minority is the individual. And so if we're really trying to cater to everyone, which I think we should, everybody's in a unique health situation. Everybody's in a unique income situation, in a different household situation or arrangement. If you're offering a small group plan, you're offering uniform benefits across the board to your employees. That might not even work for all of them. What I'm asking and what I'm saying they should do is take that money that they've earmarked and allocated towards providing health insurance benefits, offer it to the employees instead as a stipend. Let those employees use that monthly stipend however they see fit to insure their family. A couple of the interesting situations that we went through in that presentation is I just made up a mock company, of an elderly couple with one person retired and a younger healthy guy and a family of four and all of these different things. What I like best about the stipend is that it allows people to go out and get the right fit for them. And one of those areas is still utilizing the Affordable Care Act.
Can I stop for a second on the stipend? I want to ask you something about this because I'm curious. You mentioned that um, if you're let's say if you're offering health insurance, you have to offer it to everybody, and you have to pay 50% of premiums if you're doing this. Does the stipend circumvent that requirement, basically?
Absolutely.
Okay.
So with the stipend, neither of us are tax professionals, but I'm sure we can both follow on this line of thinking. The stipend is simply an extra line item on the paycheck. And
Mhm.
so where some small business owners may gasp at that and say, well, it's not a pre-tax benefit. And some of the employees might say, well, why is that being taxed? The advantages to having that as simply additional income far outweigh, with the flexibility of being able to choose any type of option, far outweigh the tax advantages
Yeah. Thank you
of
for that
having
clarification. Yeah.
a pre-tax plan where you're pigeonholed into what the company is offering and what the employer has determined is a good plan to offer, through a broker or whatever. So
Okay.
that's where the stipend really comes in. You could have it on a graduated scale. Maybe the first year, each month you give $150 a month per employee. But as the years go on, maybe you add another $50 a month every 6 months they've been there, because to make it more intriguing to retain the employees. So not only are we attracting them with the stipend, but we retain them by giving them added bonuses for their retention, just as you would any type of raise, year after year with an employee. So you can also identify key employees, or you could identify that maybe one of your employees is sicker than the other ones. Maybe they've had some health issues. Maybe they have an expensive medication, but they're a key employee that you want to keep. You can up their stipend to make sure you're covering all of their individual health insurance that they need. And it's simply just a line item that you would talk to payroll to increase on their additional income.
Now, do they have to use the stipend for health insurance, or in theory, not that we want this, but in theory, they could use it for whatever they want, right?
So some small business owners are already employing this method, and they basically shrug their shoulders and they say, well, I can't enforce them to, but that's the idea behind it. And they're thinking, well, if they come to me complaining that they had a large medical expense, it's it's not really on them to enforce that it's being used in that manner. What I typically do is I simply tell them whether or not, due to HIPAA authorization and violations, we can't really get into medical history or anything, but I am able to notify people when a certain policy will lapse. I don't give any policy details or anything like that, but if it's up, I can notify people about that. And if the plan goes away, I can make a notification about
To the business owner.
that. Right.
So if an employee's plan is about to expire, or it does expire, then you can tell the business owner, hey, this person looks like they are not keeping the plan up to date. And then the business owner might want to have a chat with the employee. Is that something that happens?
I've never seen that happen,
Okay.
but it is something that I say I will help because, just as with any plan that lapses, whether or not we're using the stipend model or not, if anyone's plan lapses, I will reach out to them and
Right.
make sure it wasn't a mistake. Because a lot of times people will change, bank accounts or something and not realize they had to switch this over, and you never want a policy to lapse. So I'll reach out to the employee anyway, to make sure they're okay, and usually they'll let me know, and then I can, alert the employer. Most employers and employees, it's not an issue that I've seen.
Yeah.
But based on that, since it's not pre-tax, it does not need to be allocated necessarily to health insurance.
Gotcha. So let's walk through unpacking specifically what these plans might look like. So you've got the business owner who's offering a stipend. The stipend is kind of labeled for health insurance costs, and then you go to the employee. At the employee level, what are the options available to them on the open market, or working with you or someone like you using their stipend? What does that look like?
So the number one place I always go to, and I always will, is I go to the Affordable Care Act. We go to the marketplace, healthcare.gov, Obamacare, whatever you want to call it. It's all the same thing. We just simply go on there. I don't put their personal information in, because if you've ever made that mistake, you'll get phone calls nonstop. So we don't do that, but we have quoting software where we can simply just look. And based off their household modified adjusted gross income, based on their ages, based on their zip code, and based on their household members, we can get sort of a snapshot of what kind of plans are available out there. Now, here is where the stipend can be tremendous. Because if it is a stipend, as you alluded to, it can be used for anything. Ideally, we're using it for health insurance. That's the whole point of this, but it can be used for anything. If that money was instead in something called an HRA, which is a health reimbursement account, they have ICHRAs now, which are called ICRAs, which are individual coverage health reimbursement accounts. They love their acronyms. If an employee puts pre-tax dollars into one of those things, and the employee goes to pay their premiums on an ACA plan with those pre-tax dollars, what that will negate is any type of tax credit that individual could have had they simply gone out and got the insurance themselves. So let me unpack that because I threw kind of a lot of stuff out there. A typical family of four, if they were to get their own health insurance on the Affordable Care Act, they can have a pretty reasonably high income and still qualify for some assistance in a tax credit to help pay for it. Now, if the employer is offering them a stipend, they can go out and they can actualize that tax credit because they are not receiving tax advantaged dollars to help pay for that premium. Does that make sense so far?
I follow you so far.
Okay. If the employer instead had one of these health reimbursement accounts where they put a benefit into an account for that employee to get health insurance, that same family of four, let's say if they were to go on the individual marketplace based on their income and their household size through the ACA, they would receive a $300 a month tax credit. If instead the employer were to give them a stipend of, say, $300 a month, they could take that $300 a month and help offset the cost of their premium. If instead the employer were to put that $300 into a tax advantaged health reimbursement account, and the family of four went to use that $300 to help offset the cost of their ACA plan, dollar for dollar, their tax credit would be removed against the money that they get from the HRA. You can't get tax advantaged dollars and receive a tax credit from the Affordable Care Act. Does that make sense? It's a
Yeah.
lot
So
of high
what's
level stuff.
right? So it sounds like the HRA account is not always advantageous.
I have only seen it be advantageous when it is used in its initial reasoning. The reason it initially came out is you could never before use it to pay health insurance premiums. It was simply a reimbursement account where the employees would go to the employer at their portal or whatever, bring them in an envelope with their receipts from health expenses, and then being reimbursed out of that. Only recently has the government and the IRS come up with this ICHRA, which is the individual coverage health reimbursement account, which they can put tax advantage dollars in to help use that to pay for their premiums. But if dollar for dollar it's taking away their tax credit, it's not really advantageous to the employee anymore.
Right. So again, always exceptions, but typically you see just doing the direct stipend makes more sense.
It does, because it then allows that family of four to either go on the marketplace and see if they qualify for a tax credit. In that situation, maybe they do, or maybe they don't. If they qualify for that tax credit, they can actualize the entirety of the tax credit and then take whatever stipend they're getting and then further pay down their monthly premium using that. Whereas in a traditional HRA, ICRA account, something like that, they wouldn't be able to actualize the tax credit.
Gotcha.
Now,
So,
yeah, go ahead.
oh, good. Yeah, I think you were going to continue your thought.
I was going to say, but in the situation where they don't qualify for the tax credit, or where maybe that ACA plan, maybe it's a narrow network plan, maybe the deductible's too high, maybe their prescription isn't covered, maybe their family physician doesn't accept the plan. Maybe they simply want to look at other options. That's where having an independent broker come in and look at all the options can really be advantageous.
And that's actually where I was heading next, because you said one of the first places you look is the ACA when kind of designing a plan for the individual team member using their stipend. That implies there are other options as well. So I'm assuming that there are other options that maybe complement the ACA or maybe are instead of it.
Absolutely. And so some of these options are a little more outside the box. I wish it were comparing apples to apples to apples to apples. And instead, with new legislation comes new products and comes new companies and new ways of dealing with, the free market always evolves. And so it's more like comparing apples to oranges to a rotisserie chicken to, an Xbox game. Like
Wow,
it's
that's
just it's all over the place as far as, but if we keep in mind the main reason we have health insurance is to avoid a catastrophic loss due to a healthcare expense. I mean, that's why you have auto insurance, that's why you have life insurance, that's why you have homeowners insurance. It's to avoid that catastrophic loss. And so if we try to keep that in mind when we walk through this, you can see where other options make sense when you are in a particular situation. So there's basically four ways for individuals outside of the ACA. There's about four different ways for them to get assistance in paying for their healthcare costs. And I've gone through and vetted a whole bunch of them, and I'm licensed and certified to sell all of them and walk people through them. But at a very high level, it's going to be underwritten individual health insurance products. So these are sort of where you can pick health insurance a la carte. You have to qualify for them medically, so they still do underwriting on them. And the insurance company limits the benefits that they pay out per occurrence. And so a lot of people, red flags go up, they hear limit, and
yeah, it sounds scary.
they say, oh my gosh, the whole reason I have insurance is to not have a limit. And that's one of the essential benefits that's pre-packaged into an ACA plan, is that they can't ask you any medical questions anymore. Every pre-existing condition is covered day one. The plan covers everything, and they cover it for an unlimited amount of money. Those are the three of the characteristics of an Affordable Care Act plan. And I love that that exists because there are so many people in this population who need a plan like that. So I am so thankful that there's an avenue for that. But if we really break down what that is, that's no longer really insurance. Insurance is a product that is based on risk. So the insurance company, no matter what it is, auto insurance, homeowners, life insurance, they assess the risk to insure you on the front end. Let's take auto insurance. They're going to look at your driving record. They're going to look where you park your car at night, how many miles, what model is it, what make is it. They're going to look into all that. And then they're going to look at what limits you want. So they're going to assess the risk on the front end, and they're going to cap their losses on the back end. What the ACA has basically said is, can't do that anymore. You have to accept everyone, and you have to cover them for an unlimited amount. Again, so thankful that that happens. But that artificially inflates premiums, that artificially increases deductibles, and it narrows down the network of providers where you can go and get that taken care of. Instead, if we transition over to an individual health insurance product where they do underwriting, they assess the risk on the front end. They pick and choose who they're going to cover. And that's not right for everybody. I'll be the first to admit it. And it may seem like it's, sort of picking and choosing, but that's what this type of insurance does. And then they cap their losses on the back end. Now, a lot of people, like you said, it's scary, and it can be. But these limits and these products allow you to seek treatment wherever you want to go. And these limits are extraordinarily high. But the reason that you have an independent broker like myself is we're not going to stop there. We're not going to stop at the limited thing. We are then going to pivot. And typically on any one of those plans, we will add an additional layer of protection. And that's where these things called cost sharing plans come in, as I'm sure you're familiar with those.
Hmm. Yeah, sort of a lot of them are faith-based, kind of called ministries. Some are not necessarily so faith-based, or a little more kind of neutral or objective. And I know you have one or two that you really like as well.
Mhm.
So tell us more about that. Tell us about the layering from, I know that you have shared in the past that sometimes it makes sense to layer two or three different products together. And
Mhm.
even though you have multiple products together in tandem, overall, the cost can still be even lower than a big company health insurance plan might be. Is that true?
Absolutely. And so depending how you look on it, not only can it save money, in my personal opinion, I have three products. It not only saves me money from my cheapest ACA plan, I personally think it's better coverage. I think it is more flexible, I know the deductibles are lower, and I know the type of care that I get is exactly what I want and exactly what I expect. And I'll break that down a little further, using myself as an example of just the different ways that we can operate and the different types of solutions that we can offer. So, cost sharing plans. I'm sure the majority of people have heard, at least offhand, a little bit about what these are. Like you said, a lot of them are faith based. A few are Christian affiliated. A couple that I work with and I'm contracted with are secular. Um, Whatever it is and however you want to use them, I think they are a great tool, and I do not think they should simply be dismissed. A lot of health insurance agents simply dismiss them. They say, "Ah, those aren't health insurance. That's not insurance," and they're right. It's not. They'll say it right on their website. They say it right on your card that they give you, your policy. We currently operate out of the state of Indiana, meaning me and you, we're headquartered there, and I know there's people all over, but each state has their individual statute on this and on these plans. And Indiana says when you're a member of a cost sharing plan, you are solely responsible for all your medical bills. You understand that. And that's just the way it is. And so
Yeah, they can't
as-
regulate.
it's not regulated. And I know from secondhand experience how well these pay out and how timely they pay out, but they are not legally obligated to. And so providers know that, doctors know that, hospitals know that, facilities know that. They've gotten big checks from these companies before. I know they have because I have many clients who are on them, but they aren't legally obligated to pay. And so the idea of these cost sharing plans is exactly the same as your health insurance. Instead of a monthly premium, you have a contribution or a donation. And instead of a deductible, you have an individual unshareable amount, or you have a personal responsibility. And your costs are never covered. Covered, it means it's insurance. Your costs are instead shared. And so all of this little new speak 1984 stuff, but it's due to legal ramifications. And so there are several Christian ones that I really like. There are a couple secular ones that I really like. It doesn't really matter how you're feeling about it or what you want. What the reason that I have.
Oh, sorry. Go ahead, Matt. Go ahead.
Well, no, yeah, go. Did you have a
Well,
comment
I'm
about?
going to jump in because I wanted to say that the interesting thing about these cost sharing plans is on the downside. A lot of people say, well, they're not obligated to pay, so who knows if they'll pay, right? It sounds very scary to kind of be um, left in this unregulated kind of situation. But on the other side, I mean, they have to kind of run like a business. And if they stop paying costs, people are going to give them horrible reviews. They're going to stop paying the contributions or the membership fees or whatever it might be. They're going to go out of business. So the fact that these companies and organizations are in business and stay in business should be some reassurance that they are delivering the product that they are providing to people. Is that fair?
I think without a doubt that is fair. If you look any of these up, Better Business Bureau, member ratings, member reviews, I mean, you could just talk to me and I'll give you a laundry list of secondhand experiences. I've luckily never had to utilize mine, but of them paying promptly and in full and on time and exactly how they say. It's simply in the health insurance world and in healthcare, every option is going to be scary. And that might sound a little doom and
That
gloom
horrible? Every option has to be scary.
but it's about pick your poison, and it
Yeah.
really is. If you want that platinum PPO, Blue Cross Blue Shield plan, well, you have to go and work for somebody else with a group plan that pays that, and you need to pay your contribution, and that's how you get that plan. That's how you get it. That's the poison that you pick. If you say, "Man, I don't want that, but I don't want these plans that have limited benefits." Okay, let me take you to the ACA. The ACA, if you don't get a tax credit, can be expensive. The deductibles can be high, and the networks, at least in Indiana, can be extremely narrow. And so you're picking your poison there by you pay a lot for the premium, you pay a lot to have the product if you don't get a tax credit. And per incident and per annual, you're going to pay a large amount out of pocket with your deductible. And with the HMO narrow network, they're going to tell you where you can go. So that's the poison that you pick is you might not be able to pick where you have that surgery or where you get that chemotherapy or where you have your lung transplant. I don't know, just coming up with random things. That's the poison that you pick on the ACA. With the individual underwritten plans plus a cost sharing plan, for me and my money and my peace of mind and my health, I have the individual underwritten health insurance as my go-to. If I'm ever hospitalized, if I have a disease, if I have an accident, injury, I need to go to the emergency room, urgent care, surgery, almost anything you can think of. That's the plan that I'm going to use because they will negotiate the bill, they will apply the benefits. The providing facility knows that this is an insurance product and that they are going to get paid because it is legally binding. After the fact, if any of those limits are, and these limits are big, they don't create these limits to get bad customer reviews and to have people upset with their coverages, but they are limited. And that's the scary part of those. And so to alleviate some of that fear, what I've done is I've utilized certain cost sharing programs to help deal with the individual's personal responsibility after the health insurance has negotiated the bill and applied benefits. In case any of those limits are ever exceeded, you bundle up all of your personal responsibility that you have left over, and then you bring that to the cost sharing plan. And I am very comfortable with these cost sharing plans helping me minimize my personal out of pocket costs after my health insurance has negotiated and paid on the bill. So that's how I use it.
You actually have 3 layers, right? In
I do
front of
have
that, you
an
also have a
additional layer.
concierge service, right?
I do have an additional layer, and this is one that I actually, when I found out about it, I got very excited. And this is one that, I don't sell, I don't make any money off it, but I try to tell as many people about it as I can because, you know, I've just walked through 2 of the 3 pieces, and there's a lot of people who just have those 2 pieces, and they're very comfortable with it because all the big stuff is taken care of. But when the majority of people think of healthcare and when they think of health insurance, they're thinking copays, is my primary care physician in network, preventative coverage, my annual physicals, my blood work covered. Well, what about, routine stuff? That's what a lot of people, luckily, consider healthcare. And those are the things that they think health insurance should cover. And I am one of them. Luckily, so far in my life, I've been extremely healthy, but every now and then I'll get these smaller things. And so what that brings me to is the final piece of my triad of healthcare coverage, and it's something called DPC, which stands for Direct Primary Care. And the majority of them like to market it as Netflix for your healthcare. It is a subscription-based model. And so my personal physician, who I use, who's a direct primary care provider, is $75 a month. And I pay that whether I go see him or whether I don't, doesn't matter. But I have unfettered access to him. He has all of my medical history, all of my charts. He handles my blood work. I have his personal telephone number if I ever want to text him. We actually had lunch the other day. He is invested in my personal health because with his model, where it's $75 a month, no matter what, I don't have copays. I don't have waiting periods to go see him. I get same or next day appointments. And even if he's on vacation, he has someone who covers his business, so I can see that person, same or next day. And I get unfettered access to him. He'll do telemedicine, video medicine. I'll go into the office, whatever. And so it behooves him to keep me out of his office as much as possible. The traditional healthcare model, they get paid every time you go in, every time you pay your $40 copay, every time you go to see a specialist. They get paid every time you see him. My personal doctor wants to keep me as healthy as possible and wants to keep me out of his office as much as possible so he can add more people into his book of
So
business.
you can oversell the membership and count on many people not using it.
That's the idea. But he doesn't want me on medication. He doesn't want to see me every 3 months to refill my prescription. He doesn't want me to be, obese or to have issues or to have to see specialists. He doesn't want that. He wants to see me once a year for my annual checkup, and that's it. And to be quite honest, that to me feels more like health care than anything I've ever received in the previous 35 years of my life. That is not to say that doctors currently in the hospital systems, your current primary care physician, I'm sure, is a lovely person. I am not saying any of these people are not providing amazing care. But quite frankly, they're overworked. After having talked to a lot of physicians, the churn and burn rate on these people, because they get paid every time they see someone. So what I have is direct primary care, and I hope that my doctor handles 99% of the stuff that I ever need. But there are things that he can't help and that he can't take care of. He's not going to perform a surgery on me. If I break my leg, I'm not going to come to him so he can reset it and put a cast on me. I'm going to go to the emergency room. I'm going to go to urgent care. If I ever need to be hospitalized, I'm not going to stop at my doctor's office first. I'm going to go to the hospital. And he'll be the first one to tell you, hey, I want you to join on to my DPC practice because I want to take care of people and I want to practice medicine. But you better have health insurance too. And he's one of my best referral sources. He sends me people all the time who sign up for him and they say, Doctor, this is great. This is what I've needed. I've needed healthcare, but in case I need something you can't help me with, what should I do? And that's when I walk them through the individual health insurance options, the Affordable Care Act, cost sharing plans, the whole gamut, just to see whatever fits best for them.
And direct primary care is not a specific practice. That's a style of practice. So there
Yeah,
may be multiple different practices all around the country that are operating as direct primary care. Is that what you're saying?
absolutely.
Okay,
Absolutely.
so
And so there's a website, I believe it's called dpcfinder.com.
oh, interesting. Okay.
And I believe there's 12 to 15. Michael and I are located in the Indianapolis area. I've made pretty good connections with about four of them because I like to have locations, and every single one that I've ever spoken to, it might be DPC Mapper, actually, now that I'm thinking about it, but any of these that I spoke to, they'll meet you one on one, face to face, and do a free consultation and make sure you click. Because a lot of people that I go and see, Michael, they're like, well, I got to have my doctor in network. I just love my doctor. And so I'm not asking you to change physicians, but the DPC, you're exactly right. It's a model of healthcare that is being replicated by a lot of physicians. I believe there's a huge following of it in Chicago. I'm sure they're all over the nation.
Yeah, I found
This
one here
brand
in
of
my town, and it's $75 a month for at least for this certain age bracket. So it might be the same one you have. Yeah, it's interesting. It's
right.
very transparent pricing. It's very clear. It is very Netflix like, which I got to say, there's something to be said for a model that everybody understands already and is convenient for people.
Well, my opinion is it's putting the power back in the hands of the consumer. When you just take the plan that your employer offers, they are sort of picking for you in a way. They are contributing to it, they are helping out with it, but they're kind of picking what your health insurance should be. And the ACA sort of does that as well with their networks and telling you, you got to pick a primary care provider, you've got to go to the referral route, you've got to do this and you've got to do that. And what we talked about, any option that you pick, there's going to be fear with it. And that's not to try to make this scary. I'm trying to remove a lot of the fear. But for me personally, my health, the fear for me is not being able to pick who I'm going to go see if I need medical attention. That's the control that I want to have. And so with the current setup that I have, I picked my direct primary care provider, and with the individual health insurance that I have and the cost sharing plan, I'm allowed to go where I need to go to seek help and to use any provider that I want. And to sort of go back, maybe 15 minutes in the conversation, if you add up, a lot of people, their heads are already spinning with all this different stuff. But I also have a lot of people who say that sounds expensive. And if you add up my direct primary care, my cost sharing plan, and my underwritten medical insurance, it is cheaper than the cheapest ACA plan on the marketplace for myself. For a 35-year-old non-smoking male in my zip code, having all three of them put together is cheaper than the ACA.
And it sounds like you feel better about the coverage.
I personally do. I feel so much better. I know how well my doctor takes care of me, and I know where I can go, which is anywhere, with my health insurance. And the cost sharing plan helps me cap my out of pocket expenses.
So this is super exciting, especially as a business owner who also has employees. So let me kind of recap and see if I get this right. So hypothetically, here's a scenario. So you've got a business owner who is thinking, "Oh boy, I have team members. I want to retain them. I want to take care of them. Um, yeah, my only option is to go to like Humana or Anthem or United and buy this expensive plan and have to offer it to everybody and pay 50%. And that just sounds very expensive. So, as an alternative to that, you're saying that one path they could take is to forget about buying an insurance plan directly, don't get a group plan at all, keep things as is. Instead, simply add on a stipend for everybody that can be whatever amount they feel like they can afford. This is a stipend for health insurance or health care costs, I should say. That's where they kind of stop. They say, okay, I'm ending my program and responsibility here. You take the stipend, team members, you go use it for your health insurance, design a plan that works for you. Then every individual team member takes that stipend and designs a plan that works for them. Now, maybe they DIY it, but probably not. Maybe they work with someone like you. And they don't, by the way, they don't pay you directly, correct? You get paid by the carriers, but they never have to pay you directly. And there's no additional cost to work with you, correct?
Right. There's no cost to the employer or the employee.
Okay.
There's also no surcharge on any products in health insurance if you use a broker to get them. The price of the commission that I get paid is already built into the price of the product.
Okay, so they can feel good about that.
Mhm.
Then some scenarios you might walk them through are, hey, let's see if the ACA makes sense for you. And maybe they just have in the past have not felt good about navigating the website and figuring out the plans, and you help them do that at no cost to them.
Right.
Or maybe if there's a lower cost way to combine products like maybe a concierge medical service or direct primary care, physician service, plus maybe a limited individual plan, plus maybe a cost sharing plan or some combination of those together could, in theory, end up giving them comparable coverage, maybe even better coverage, but definitely in the realm of comparable coverage, potentially for lower costs than they would pay even for regular insurance premiums. Have I got all that right?
Yes.
Okay.
And there's just, there's added benefits to the business owner. They want to provide something. During that presentation, we talked about it, and last year, a small business is classified as somebody with fewer than 50 full-time employees, and only 48% of small businesses in America offered a health insurance plan. I guarantee you, upwards of 90% wanted to, and perhaps they couldn't afford to. At the very least, what they can offer is to have a broker come in and talk to them because, again, there's no cost for it. But it offers the business owner flexibility in what they contribute and who they contribute it to. It offers them less of a headache because they don't have to administer any plan. If the employee ends up leaving under their own volition or they're let go, there's no COBRA paperwork. There's no HR onboarding. There's no HR deboarding. There's none of that. The employee can take it with them because it's an individual plan. Um, and whatever they end up deciding, they don't have to maintain that plan. There's no upkeep. That's me. That's the broker. They are then the plan administrator. And so there's a lot of benefits to it, and it's at a flexible cost based on what the employer's appetite is for that.
I don't want to put you on the spot and you can decline if it's just too across the board to answer this, but in your experience, what are some typical stipend amounts that you see from business owners when they're designing a system like this to offer to employees? Is that
So
something you're able to answer? Or is it too across the board?
no, I can answer it. There's been about kind of three different ways. Some do a set amount all the way across the board. Let's say $300 a month. They just say each employee is getting $300 a month because a woman in accounting might get her health insurance through her husband, and so that $300 a month can now pay to offset the amount that's deducted out of his check to add her to his plan, something like that. So they do the $300 a month across the board because they want it to be equitable. They want it to be fair. Other employers I've seen want it to be fair, and they say, whatever's best for you, whatever you and Matt decide is best, I'll cover 50% of it. So for some people who maybe don't qualify for a tax credit, maybe have health issues, maybe have a large family, that 50% might end up being $500 a month. But for the young hire that just came off their parents' health insurance, it might be $100 a month. But to the business owner, that 50% is equitable and that 50% is fair as long as we're getting you the right health insurance that you and Matt decide for your situation. And then a lot of them actually, Michael, they identify a few key employees that they have to retain, and they say, get the right insurance, we'll pay 100% of it. And then for newer hires and based on seniority, they have sort of that graduated scale that I mentioned that, every 6 months we'll contribute another $50 a month to your pay. And it's something like that.
And it can be totally flexible because there's no regulation on how much stipend you can give someone because you're not offering a group health insurance plan. So you can, like you just said, you can basically have individual arrangements with any employee you want and pay them all different rates if you want to. Not that everyone's going to do that, but that's in theory what could happen, right?
Right. And I would just keep in mind as a small business owner who wants to do that, your employees are going to talk to each other.
Right.
And so, that's
Not
the
going down
only
the
thing.
culture, taking care of people. Yeah.
That's the only caveat that I put out there is don't, give Joe something that you're not going to give Mary if Joe and Mary don't get along or whatever it is, whatever it is. But business owners know that. And from what I've seen is employees would so much rather have something than nothing.
Mhm.
Because if you're one of the 52% of small business owners who's not offering a group health insurance plan, that's okay. But your employee is still out there looking for health insurance. Maybe they have it through a spouse. Maybe they're young enough to still have it through their parents. And that's wonderful. But I'll bet there are some of your employees who have to go and navigate this on their own. Just to keep that in mind.
Yeah. I got to say, this is a very intriguing um, set of options you've laid out for us, and a very intriguing path that business owners can look at. And I think you've made a lot of it really understandable and really approachable and accessible. And I'm sure a lot of people had no idea this path even existed. So that's been phenomenal. I can see why you've been so successful. This is why I love referring people to you, quite honestly.
The majority of people who end up going through the whole spiel with me are exactly like that, Michael. They say, I didn't realize this was even an option. And some people don't like it, to be perfectly honest. Some people say, yeah, I just want one thing, and they'll pay the extra premium and just get the one thing, and they'll say, I'm more comfortable with that.
I don't
That
want this fits all, like you
fear.
said.
Yep. And that's great. And now that I'm an independent broker, perfect. Let's do what makes the most sense for you.
Yeah, love it. It's been awesome. Thank you so much for breaking this down for us and for sharing. And is there anything else you want to add before we get to some contact information for you in case people want to reach out? Anything we
I
haven't
don't
covered?
really think so. Just stay healthy and um, you know, if you take care of yourself, if you're trying, that's really what's the most important in my opinion. And let's an ounce of prevention is worth a pound of cure. That's one of my favorite quotes of all time.
All right. Well, let's wrap up with how people can find you. Now, I'll just say I refer people to Matt all the time. So if you want to reach out to me, I can make a connection for you. And Matt, you work. So I'm always pushing you to work in all 50 states. I know that you don't technically have the same licensing that works in all 50 states, but I know personally that I've referred people to you in different states, and you're like, you know what, I got a license in that state, specifically to work with a specific client. So is it fair to say that you'll talk to anybody in all 50 states? And for the most part, you can find a way to help them, even if that means taking on a license that you don't have to go to enter that state. Is that fair to say?
That is fair to say. Health insurance is still on a state by state basis. So my only trepidation with that is I'll be able to navigate the market with you. But if I haven't been working in that state for a very long time, I may not know every option that's available. I'll still know some good ones, some good options, no matter where you are. And I'll go and get that licensure if I don't have it. But yes, I'm able to work in any state as long as I go in the Department of Insurance and pay the fee.
Okay, gotcha.
Mm.
So, yeah, so wherever you are in the U.S., definitely consider reaching out to Matt if you're struggling with the challenges of health insurance, especially as a business owner, as we talked about, or just reach out to me. I'll connect you with Matt. But Matt can be found at iconic-insurance.com. That's iconic-insurance.com. And your website's great. It's very elegant and simple and easy to contact you. So definitely encourage people to reach out directly or just send me a note, and I'll be happy to do an introduction to Matt. So Matt, thank you. This has been awesome. Glad you're here.
The only last thing I want to plug is I've started the health insurance podcast up.
Oh, right. Right.
It'll be premiering this Friday. It'll be available wherever you get your podcast, but it's called How in the Health Insurance Podcast. I have a couple people who aren't quite the health insurance nerds on there co-hosting it with me, so we don't talk too high level. But it's basically just breaking down strategies like we outlined here in small, digestible clumps, and just ways that people don't even necessarily need to change their health insurance, but just why healthcare is the way it is, where you can save money, and we give sort of how-tos of how to walk through it. So that's the How in the Health Insurance Podcast.
Love it. All right, we'll look it up. All right, thanks, Matt. Always a pleasure. I'm so glad you were here. Really appreciate your time. And everyone, thanks so much for joining us today. As always, you can find me on the web as well at elevationfinancial.com. Send me a note via email if you want it, podcast@elevationfinancial.com. And thanks for joining us today. Have a great day. We'll see you next time.